Raj, tell us about your your reaction, especially to the devaluation of the RMB in August. Were you surprised? What was your initial reactions, and how does that affects your strategy going forward?
Yeah, I was very surprised at the time because I was actually, maybe I should use that mic. I was actually on vacation, so I found out a few days after everyone else. But also, I think it caught us totally by surprise, and our supply chain strategy to convert suppliers to Chinese yuan has stalled since then. So, like the turnover FX chart that Carmen showed from Standard Chartered, I only confirm that our supplier conversion has stopped at about 15% of all sourcing from China. And the noise from suppliers died overnight. They're quite happy to keep receiving dollars, and I can understand why. At the same time, I think living with regulatory surprises in the summer months in particular is kind of normal. A lot of things seem to happen in the summer months from the People's Bank of China, and I think Chinese yuan will always be a relatively controlled currency. So I don't envisage in the next few years that it will be freely convertible, and I don't think that needs to happen for corporates to enjoy the level of risk management and usage of Chinese yuan that they need to achieve, because my learning in China has been that there is a tremendous pragmatism among the policymakers to try and make things work for you. That's at least our experience.
All right. So do you have to change the strategy going forward, or what happened then to what you've already developed in the past?
Well, I think for those suppliers that are being paid in Chinese yuan, that's fine. I mean, that's business as normal. For the ones who are staying in US dollar, well, it did lead us to take some losses on a Chinese yuan hedge last year, because we have a fixed price catalog in the retail business, as many know. And of course, all that risk is centralized in the group treasury. But we do have a capital base to withstand that. We take a portfolio approach. So to lose money on the Chinese yuan hedge was disappointing, but it's not the end of the world for us. Has anything changed? No, only to be hyper vigilant about what's going to happen next. But I think for the things that we need to do to support our business in China, on both the sourcing side and more importantly on the retail side, I think we can do just about everything we need to these days.
Yeah, okay. Carmen, while there is a temporary capital outflow control, right? There are still reforms happening in China, and now you mentioned about the opening of the bond market, and also the PBOC has just recently announced the changes in the nationwide implementation of the macroprudential policy. Can you enlighten that on us, and first of all, address the bond market opening?
Well, I think the panda bond market opening is something that will further make renminbi also evolving from a trade, investment, treasury, reserve currency into what I call financing currency. And I think this is very important. And without renminbi being really a financing currency, it will never become an international currency, is my view. So as I also alluded earlier, China's bond market is the world's third largest bond market. It has a $7 trillion US dollar worth. And this market is now being, a lot of the issuer are Chinese government banks, what we call government bonds, and some of SOE. So opening up this market is important for the issuer, because you have such a big bond source of funding that you can tap. And China market is also flush with liquidity, and this is the reason why the dim sum market is a bit subdued, because of the onshore funding is a lot cheaper than the offshore funding. And these also Chinese investors, they're also looking, there's a big appetite for them to look for diversified investment, to look for something that that are not Chinese name or high-grade multinational names that they're looking for. So I think this opened up a really good source of funding to both the issuer to tap this market, and at the same time, it's also good for the Chinese investor, so they can also diversify in the investments. Just one point about this. If you look at the mutual recognition of fund, a lot of people start tracking it. If you look at the mutual recognition of fund, which just started trading more actively this year. If you look at this Hong Kong funds being sold in China, this has been increased in multiples during the last few months. Whereas the otherwise is not a lot of traction. So you really see that funds being manufactured and sold in China have a lot of interest. So that means a lot of Chinese investors are really interested to diversify. And I think this is an opportunity for the international issuer. But of course, as the panda market is still in its inception, there's a lot of challenge. And the fundamental challenge for a lot of investors they're facing is the clarity on use of proceeds. Because if you don't even know how you can use your proceeds, it's difficult for you to think about even issue. So we know that China is a bit edgy about or jittery about capital outflow. But on the other hand, if you are issuing and if you are prepared to leave your proceeds to stay onshore, actually all the hurdles are removed from an announcement that happened 2 weeks ago. That panda bond actually is not being defined as foreign debt anymore, except for real estate company now. All international issue, if you are issuing panda bond and you want to leave it in China for you, you can do so. And there's no need to go for foreign debt quota, consumption, and foreign any approval. So I think this is a good thing. But the biggest hurdle still remain is if they want to use it offshore, because the offshore swap market is very attractive. If you can swap it into US dollars, LIBOR minus for a lot of issuers. So the use of proceeds is still only one way. The other big challenge is on the accounting, because China only accepts China GAAP and also IFRS. So for those on not IFRS, there's still a big challenge. But I think these are evolving, and we'll see interesting thing that's happening in the panda market as well.